at the right time.
Good morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. Happy Monday to you. First, the headlines this morning. It's a strong start to trade in Asia after policy comments from the Fed chair and easing of monetary policy in China. A group of ministers has allowed Kerala to levy a 1% calamity cess on goods and services in the state. The proposal will be put before the GST Council on the 10th of January. Lenders of Jet Airways have asked promoter Naresh Goel to submit a formal revival plan by the 21st of January. This comes after the carrier defaulted on certain repayments last week. Ericsson India has moved the Supreme Court seeking a civil arrest of Reliance Communications chairman Anil Ambani over non-payment of dues worth 550 crore rupees. And a Mumbai court has declared businessman Vijay Mallya a fugitive economic offender, a first under the Fugitive Economic Offenders Act, which came into effect last year. Let's talk about the U.S. markets now. One comment from Jerome Powell is all that it took for stocks to soar on Wall Street on Friday. U.S. stocks ended strongly, and how, with the Nasdaq gaining about 4.3% and the other two benchmarks also gaining handsomely. That's after Fed Chair Jerome Powell mentioned that the Federal Reserve policy is flexible, signaling a possible pause in rate hikes going forward. Abigail Doolittle of Bloomberg News sums up all the action on Wall Street in this report.
Stocks surged in Friday's Wall Street session on the back of a blowout jobs report for the month of December. Plus, Fed Chair Jerome Powell gave comments that were perceived to be somewhat dovish or bullish on the part of investors. The Dow, the S&P 500, the Nasdaq closed higher by between 3.3% and 4.3%, led by the tech-heavy Nasdaq. Not surprisingly, then, tech was the top sector on the day, up 4.4%. Some of the top point boosts there, Apple, along with Microsoft and Alphabet, Intel there too. While on the percentage performance standpoint, AMD, the chip maker, really blew it away, up more than 11%. Now, all of that really wasn't on new company news, but more on the bullish macro backdrop, telling you investors on Friday were truly buying Thursday's dip. However, Netflix was up for a specific reason, up nearly 10% on the day, now up more than 25% from its low on December 24th. Really quite a rally here on bullish analyst comments on Friday. Goldman adding Netflix to its conviction list. And confirming the risk rally was the fact that the commodity complex was up 1.1%, helped out by oil and natural gas, while Haven bonds and the Japanese yen sold off. On the week, though, it's a bit more of a mixed picture. Stocks did climb on the week, but Haven bonds and the Japanese yen did too, pointing to the possibility of more whipsaws and volatility ahead. In New York, Abigail Doolittle, Bloomberg News.
All right, but that sets us up for a very interesting day of trade here. Let's first talk about Jerome Powell and his comments. He attempted to allay market concerns that the Federal Reserve's policies could derail economic expansion. At a panel discussion on Friday, he signaled that the central bank is open to pause rate hikes if financial conditions so warrant. Listen in.
I think the markets are pricing in downside risks is what I think they're doing. And I think they're obviously well ahead of the data, particularly if you look at this morning's labor market data and the other data that I cited. So markets are expressing concerns, again, about global growth in particular. I think that's becoming the main focus, and trade negotiations, which are related to that. And I'll just say that we're listening carefully to that. We're listening with, sensitively to the message that markets are sending. And we're going to be taking those downside risks into account as we make policy going forward. We will be prepared to adjust policy quickly and flexibly, and to use all of our tools to support the economy, should that be appropriate, to keep the expansion on track, to keep the labor market strong, and to keep inflation near 2%. We're hearing a lot from different groups of people about the role that the balance sheet normalization may be playing in the markets. I think we are of the view that what really happens mechanically when our securities mature is Treasury issues a comparable amount of securities, but they do so across the yield curve. The amounts are not that big. They haven't been that big compared to the issuance Treasury is already undertaking. So we don't believe that our issuance is an important part of the story of the market turbulence that began in the fourth quarter last year. But I'll say again, if we reached a different conclusion, we wouldn't hesitate to make a change. If we came to the view that the balance sheet normalization plan or any other aspect of normalization was part of the problem, we wouldn't hesitate to make a change.
So in case you missed what we said at the start of the program, those comments there led to a stellar gain on Wall Street on Friday, and that's essentially leading to a risk-on tone in Asia as well. Not to mention the update in China with regard to monetary policy. I'm joined by Rosalind Chin of Bloomberg News in Hong Kong to tell you all about what's happening on the ground in Asia. Morning, Rosalind. The cues look really good at the start of the week. What is the fine print that you have for the Asian markets this morning?
You're right on all those counts. We have stock markets here in Asia really flying out of the gate this morning. If you look at Japan, the Nikkei and the Tropics both up by more than 3% at this point in the session. The MSCI Asia Pacific Index gaining 2%. And yes, it is really a clutch of positives that are helping to drive the markets this morning. So we've got, as you mentioned, the RRR cut in China that came late on Friday, helping to drive US markets there. We had Jerome Powell's comments, as you've mentioned, hinting that the Fed could be open to pausing rates. We've had stronger than expected U.S. job numbers coming out on Friday. And, of course, U.S. officials kicking off talks with Chinese officials in Beijing today. A little bit more progress there seen on the trade issues, the trade tensions surrounding those two countries. So all these factors really moving together to help drive the markets this morning. We've got the Hang Seng Index up by 1.5%, Shanghai Composite up by 0.7%. That's slightly unsurprising. If you look at the numbers, M Live analysts are saying that it's not surprising that you see Japan doing so well this morning because it has a correlation, a 26-week correlation with Wall Street of 0.75%. Any correlation of 1% means that the markets move in lockstep. So, seeing as the markets did so well at the end of last week, we're not surprised to see Japan doing well today, and also better actually than the CSI 300 index, which right now is up by 0.6%. Just a quick look at oil, because we've got Brent at 57.60 a barrel and WTI crude futures at $48.51 to the barrel, and that is we're looking at basically some forecasts that Goldman Sachs put out, saying that they see crude Brent at $62.50 a barrel this year, down from a previous $70 a barrel, and WTI averaging $55.50 a barrel, down from a prior forecast of $64.50. These, the Goldman is saying, with the current prices below these levels, it sees them as undervalued at the moment. But of course, that they obviously see a little bit of a rejigging of the oil landscape going further into 2019. Back to you.
Thanks so much for that, Rosalind. I want to talk about one of the points that Rosalind mentions, and that is about the trade talks between U.S. and China. So those two countries head into trade talks this week. Deputy U.S. Trade Representative Jeffrey Gerish will be leading a delegation to meet Chinese counterparts today and tomorrow in Beijing. That's according to a statement by China's Commerce Ministry. Now, what exactly could come from those meetings? To tell you all about that, we have this report by Stephen Engel of Bloomberg News. Check it out.
The Chinese are hoping that the United States will be a little bit more conciliatory and will want to reach a deal, given that some have said that the market turmoil that we've seen in the United States has kind of turned the perception on Trump's success with China to the negative, so that Trump, perhaps the White House, wants to have a better deal forward. And look at the Chinese data. The data has not been good. The PMI below 50, manufacturing is weakening. Trump even tweeting, talks have been going very well. The tariffs have hurt China quite badly. That was a speech in front of the White House, or a press conference in front of the White House overnight. And the Shanghai Composite Index is down to a 4-year low. So there is and the backdrop is an impetus perhaps to get a deal done. But will the White House back down on its big key issues, aside from, of course, reducing the deficit? They want the big structural issues about eroding the state support for key industries like chips and robotics, and they also want to end, or at least a time frame and some hard pledges from the Chinese that they will stop these forced technology transfers that have led, they say, to rampant and systemic intellectual property rights violations. The Chinese say they have new laws being drafted to combat intellectual property rights violations, give more teeth to the courts and also to claimants who say they've been ripped off. However, again, again, it's always in the implementation.
It's always in the details, of course.
It's in the details and timeframes and implementation.
So what would be a realistic deal at this point then?
Yes. So David Dollar at Brookings, he says if the two sides really want to reach a deal, they probably can, based on the things that they can agree on, like Chinese purchases of U.S. energy, which they've already said they're going to do, or farm products like soybeans, which they've already done. They could also increase market access to the automobiles and the financial institutions, which they've already pledged. So these are low-hanging fruit to reach a deal. Chinese could also announce some of these draft laws that they're putting in place, perhaps in intellectual property rights violations. But again, it does not address the main issues and the stumbling blocks. The Chinese, they want the United States to permanently withdraw those new tariffs, but they suspect that the United States is going to want more concessions before they agree to do that. So right now, it's vice ministerial level talks today and tomorrow at the Chinese level, and Deputy U.S. Trade Representative Jeffrey Garish leading it, as well as Treasury Undersecretary.
All right, well, that's the latest update with regard to trade talks. Remember, the truce between the U.S. and China is ongoing, but if no deal is struck, those tariffs come into force again in March. But let's now talk about trade in India and the trade setup for the day. Agam Vakil is here to tell you all about that, and also to tell you what's happening in the futures and options space. Well, Agam, the strongest possible cues going into the new week, and in fact, index futures for the US indicating that that rally that started on Friday isn't over yet. So how are we looking in India?
Right, absolutely. Encouraging cues coming in from global markets, Alex. And because of that, we're seeing a gain of around nearly 1% for the SGX Nifty, and that possibly could augur well for our markets in opening. But that said, when it comes to trade last Friday, well, it was largely range bound, about 0.5% gains for the Nifty, and the mid cap and the small cap indices moving largely in tandem with the benchmarks, with the Nifty Bank and the Nifty PSU Bank advancing, but the PSU Banking Index up at as much as 2.3%. But let's take a look at ADRs, and we've seen substantial gains in Tata Motors up 7%, followed by Vedanta up 6%, ICICI and HDFC Bank also advancing quite substantially. And in fact, we have had no losers, with the Wipro giving marginal gains and advances for, of course, Infosys and Dr. Reddy's. But well, when it comes to your institutional flows, at least on Friday, we didn't see too much. Again, gross numbers very small and insignificant for FIs as well as DIIs for that matter. But in terms of your contributors, okay, we'll come down to contributors in a bit, but this is your futures and options market, so space. In your futures, we do have longs building into the system. Let's bring up the Bank Nifty then, and Bank Nifty futures will see, well, another accumulation of around 2%. Well, that said, we take a look at your other variables, and in this case, your open interest distribution, which well continues to lie within the 10,500 mark in the lower end, with the maximum open interest with 10,500 put, and on the higher end is the 11,000 call. And when it comes to changes in open interest, well, it was range bound, and a lot of traders were taking the opportunity to go and sell options which were much far away from current levels in calls and puts, as is evident here in this case. But when it comes to your other factors that we can watch out for, Adani Power and Jet Airways, of course, remain in the band, bringing out the India Volatility Index here. And we take a look at perhaps what's going on in the India Volatility Index, so a decline of around 4% at 16.2. And the Nifty put call ratio remains unchanged. The Bank Nifty put call ratio, well, that has moved up to around 1.12. And in terms of stocks, what we are keeping an eye on is something like a Mindtree. We're going to have your IT earnings start to trickle in, and the IT pack in general was one of those weaker moving stocks last Friday. But look at Bharti Infratel, very strong gains coming in, a lot of longs building in there as well, and something like an Apollo, the hospitals also stands out considering fresh buying into futures. In terms of unwinding, what we're actually seeing is ONGC and Siemens looking at a bout of short covering considering a decline in open interest. And of course, not too much to speak for otherwise for Jet Airways and Escorts. Of course, Jet Airways, as we know, is in the F&O ban. So these are a bunch of stocks we're watching out for, Alex. And well, as the SGX Nifty is indicating, a positive opening expected.
Absolutely. Let's talk about the rupee before we move on to some of the stories. In fact, Agam mentioned Jet Airways. We'll talk about that as well. But first, let's talk about the rupee. The rupee appreciated by 48 paise against the dollar on Friday, marking its strongest single session gain in 2 weeks. The rupee ended at 69.72 against the greenback. Strength across Asian peers on easing of worries about global growth and U.S.-China trade war supported the rupee. However, the rising crude oil prices limited the upside. The US dollar index rebounded sharply following better than expected results from the monthly report on US labor markets. Now let's talk about the bond markets. Yields on corporate bonds rose 3 to 4 basis points on Friday after several states announced farm loan waivers, and the cyclical nature of states borrowing more in the last quarter of the financial year led to expectations of an elevated supply of state bonds coming in to the market. Let's now shift focus to commodities. There was a brief mention of crude oil prices. Yash Upadhyay is joining in with the latest in that market and in all the other commodities as well. Good morning, Yash. What are you picking up this morning?
Morning, Alex. So crude oil prices, they surged for another day of another 2% on Friday, ending the week up 9.3% to post its best ever weekly gain since December 2016, following a strong jobs data and dovish comments on interest rates from the Federal Reserve. Most base metal names, they ended the day higher as well, with copper prices rebounding on Friday to gain more than 3% from the previous day's 18-month low after China cut bank reserve requirements and announced new fresh trade talks with the United States next week. Zinc and nickel prices, they rose over 2% each, while aluminum prices, they extended their rally on the upside for the second straight day. Gold prices, on the other hand, they snapped their 6-day winning streak, falling about 0.5% or so on the back of stronger than expected US payrolls data.
Thanks so much for that, Yash. Now let's see what's making headlines across the globe. Kathleen Hayes of Bloomberg News brings you all the first word headlines.
On the Brexit front, Prime Minister Theresa May has stepped up her battle to persuade the British Parliament to back her Brexit deal. She's promised more details of the plan in coming days, warning the UK will be in, quote, uncharted territory if lawmakers reject her plan in a vote later this month. Speaking to the BBC, she said that vote is still scheduled to happen next week.
We are going to hold the vote. You said it was due to be next week. Actually, the debate starts next week, and the debate will carry on into the following week. But we will be holding the vote.
We're talking about the 15th or 14th, or around
that sort of time.
President Trump has renewed his threat to invoke a national emergency as a way to circumvent Congress and build a wall on the southern U.S. border. He says that will depend on what happens in ongoing talks to end a partial government shutdown, which is now into its third week. Democrats have already threatened a legal fight if Trump declares a national emergency.
I think the president would be wide open to a court challenge saying, where's the emergency? You have to establish that in order to do this. But beyond that, this would be a terrible use of Department of Defense dollars.
Japan's prime minister says the government's considering measures to protect companies from asset seizures in South Korea linked to wartime forced labor complaints. Lawyers representing South Koreans forced into labor have reportedly applied to seize Nippon Steel's local assets. Last year, South Korea's Supreme Court ruled that Nippon Steel and Mitsubishi Heavy were liable to pay compensation. Carlos Ghosn's son Anthony says his father will mount a vigorous defense at his first hearing on Tuesday. The former Nissan chairman is indicted on suspicion of violating Japan's financial reporting laws by underreporting his compensation. Anthony Ghosn told a French newspaper he expects everyone to be surprised at his father's version of the story. Global news 24 hours a day on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Kathleen Hayes. This is Bloomberg.
And this is Bloomberg Quint. You'll find all of those stories on Bloomberg Quint as well, so do check it out. Let's talk about one of the headlines back home. Jet Airways lenders have called on promoter Naresh Goyal to quickly submit a revival plan for his struggling airline. This after the country's second largest private airline defaulted on loan repayments on the 31st of December. Now, Vishwanath Nair, who has spoken to a couple of people involved in the negotiations, is joining us live this morning. Vishwanath, what are you picking up with regard to the timelines, and what really are we speaking about with regard to the repayments?
So what we understand from two people who are a part of very closely involved with the negotiations between the lenders and the promoters of Jet Airways is that by January 21st, the promoters will have to submit a revival plan. The revival plan will have to include in some way or the other, an infusion of fresh equity as well as sale of the assets that are owned by Jet Airways. So essentially, these two are key clauses that need to be there according to the lenders. So the lenders want the promoter to either get in Jet Airways' current partner, Etihad, which owns about 24% stake in the airline. They want Etihad to buy more stake. Or if that is not possible, then probably the promoter could get somebody from outside. Now, the reason January 21st is important is because after 30 days of being in default, a company enters something known as SMA-1, which is an asset classification of the RBI. And once that asset classification breach happens, then the lenders will have to swing into action and take the matters in their own hands. So they're giving time to the promoters to come up with some kind of strategy, some kind of revival plan according to what they see fit. But if the promoters are not able to do that, then the lenders will have to take matters in their own hands. Alongside this, the lenders will also meet later this week to discuss 1,500 crore additional loan request that was placed by the promoters so that they can pay back some of their vendors. Remember that these vendors and employees of Jet Airways have not been paid for the last few months, and therefore, paying them is of utmost importance right now. But lenders have not yet taken a decision on whether this is something that they want to give to the promoters right away.
A ministerial panel has suggested that the state of Kerala be allowed to levy a 1% disaster cess on select items on the value of goods and services that the state of Kerala chooses to. So now this disaster cess would be levied on the value of goods and services that the Kerala government decides to levy this additional 1% cess on. So either 1% cess would be levied on all goods and services, or it could be on a select list of items like the sin goods, and this discretion has been left to the Kerala government. This decision has been taken by the ministerial panel headed by Bihar Deputy Chief Minister Mr. Sushil Modi, and the state of Kerala has been allowed to levy this 1% cess for a period of 2 years. Another ministerial panel that was tasked to look into the problems faced by small businesses has decided that the composition scheme, which could be earlier availed by only manufacturers, traders and restaurant service providers, should now be extended to all service providers whose annual turnover is up to rupees 50 lakh. The group of ministers panel has also decided that the composition dealers or taxpayers who avail the composition scheme will, however, have to pay their taxes quarterly, but can now file their returns annually. Another decision taken by the group of ministers is that the exemption threshold for registering under the GST regime should be extended or hiked from the current 20 lakh rupees, but the ministerial panel could, however, not reach a consensus as to what the new exemption threshold would be. But this discretion has been left to the GST Council and take a call as to what the new exemption threshold would be. There were various suggestions received by the ministerial panel, like the Delhi government suggested that the new exemption threshold should be 40 lakh rupees, while the Bihar government suggested that the new exemption threshold would be rupees 50 lakhs for registering under the GST regime. But this call or the decision on this as to what the new exemption threshold would be will now be taken by the GST Council.
Well, 5 stocks that we're tracking this morning. I'm going to start off with NHPC, which has informed that the Jammu Kashmir power station is completely under shutdown right now from the period of Jan 1 to 12th, and that's on account of replacement work being undertaken in this power station, and that's going to be tentatively leading to a loss of around 21.4 million units, along with a 0.55% loss in plant availability factor. IDBI Bank is the second stock on our radar. S&P has revised the credit rating on the bank from BB watch negative to BB stable. S&P expects the bank to now meet the regulatory capital requirement following a capital infusion coming in from LIC. SOBA update, where the company has informed about its Q3, says that the share of sales value has decreased by as much as 2%, but the price realization for the same period has increased by as much as 1%, and has also updated that the company will be launching in one more affordable housing project in Gujarat Gift City in a span of next 2 to 3 quarters. And we're also looking at Responsive Industries, which has launched luxury flooring tiles. And with this, the company now forays into business to consumer segment. And last in the list, we're looking at Tata Motors, which is expected to meet Premji Invest, SBI Life Insurance and Antique from a span of around Jan 7 to Jan 9th.
All right, thanks so much for that, Nikki. Well, there's lots to talk about over the course of the day, and you'll find all the live market action right here. It's going to be a busy session and perhaps a positive one from the indications that we've received. Let's talk about some of the stories that you can find on the website as of now. The Confederation of All India Traders has urged the Commerce and Industry Ministry to not allow private labels to be sold on e-commerce marketplaces and desist from extending the Feb 1st deadline for implementation of the changes to the FDI policy for the e-commerce sector. Well, that's all we have for you in this edition of All You Need to Know. For all the news and updates, do stay tuned. This is Bloomberg Quint.